All right, everyone, welcome back to the monthly investing adventure. Today is Monday, October 2nd, 2023. It's the beginning of the month. Our transfer in of $250 is in place and we are ready to buy. So before we do the buys, let's quickly review the allocation for the portfolio and how it's done for the last month, and then we'll get into it. So the allocation is pretty much 70-30, so 70% stocks and then 30% other things, bonds and gold. On the stock side, we're going to divide it up where 35% of that 70 is in QQQ. This is pretty much large cap growth. And I'm using QQQ, but you can use any other large cap growth ETF. 35% of the other 35% is in AVUV, which is small cap value. This is the Advantis fund for small cap value, but you can use VIOV from Vanguard or even VBR from Vanguard. We have 20% in government bonds and 10% in gold. So that's the allocation in case anybody is following along for the first time. In terms of how this is forecasted to do on the back test, we're supposed to get 9.4% over the long haul with this return. But because August and September was really bad, we're actually about 1% below that at 8.4% on an annualized basis based on our actual returns. But this allocation should serve you well for the long term, so don't be afraid to do it. When things are going down as you're adding money to a portfolio, you're just buying more shares on the cheap, so don't be afraid of that. In terms of where we've ended up for the month, we ended up at $1,778. This is before contribution. After contribution, we're over $2,000, which is a pretty good thing over the last 6-7 months of just saving $250 a month. And if you stop and really think about it, I'm sure that you've heard that many Americans can't even afford a $1,000 expense if it was to pop up unexpectedly. I think the actual number is like 57% from Fortune, which is pretty shocking that more than half of the population can't deal with that type of emergency expense. But if you've been following along and saving consistently, you're well ahead of the curve. So whether you can save $250 a month like I'm doing here in this example, or even $100 a month, the key is to do it regularly and over the long course of time. In terms of the actual performance on a monthly basis, let's take a look at that and see how it's doing. In the first couple of months, the blue line, which is our portfolio, has been tracking the forecast pretty well. And in fact, it was above it very slightly. But over the last 2 months, it's now just below the dotted orange line forecast. But if you zoom back out and squint a little bit, it's pretty much right on that line. And I expect it to be. So not bad at all. Sometimes you'll be up, sometimes you'll be down. Let's look at the buys for the month. So after our $250 contribution, the spreadsheet is saying that we should buy $90 worth of QQQ, $93 worth of the small cap value, $41 worth of the government bonds, and then $26 of the gold. So let's go ahead and do that now, and we'll see what the portfolio looks like at the end. So for NASDAQ 100, I'm going to click on buy. And I'm buying dollars. I'll buy at the market, and we're going to buy $90 of this. Preview, and get that order placed. We'll enter a new order, this time for the small cap value. And just double checking here, we're supposed to buy $93 worth of that. So I'll go ahead and buy dollars, market value, 93. Preview the order, and place it. Next, we're going to buy the bond, buy dollars, market. Let me just double check my math. It's 41. So we'll put in 41, preview, and place the order. I'm going to do a quick refresh just to make sure that all the buys are in and we know our buying power for the last buy. So let's go ahead and do that. All right. So we have 3 yellows. So yellow is the way that Fidelity is indicating that there was activity on that particular security. And the last one is just the gold. So we'll click on that and buy. It should be around $26, we can double check our buying power. It says 27, that's good enough. So I'll go ahead and buy, market. I'll put $27 and then click preview. We get the warning about this being a commodity, blah, 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 but we want this in our portfolio. So we'll go ahead and place that order. And one more refresh. All right, so here we are. We have pennies now, which is a good thing because we don't want to have a lot of cash just sitting there not working for us. So this is actually a great thing. All four securities have traded for the day and we are pretty much balanced. So the reason that I use my sheet to help me calculate the buy value is that as I'm adding new funds to this, I want to do my rebalancing at the same time and buy more of something that has gone down and buy less of something that is doing pretty good. So that's the buy, and that completes it for the month. Let's quickly look at the portfolio performance over the last 6-7 months and see how we're doing. So this is the historical return on a monthly basis. And we can see that when we first started, we did pretty well. We had 1 month that was barely down, and then June and July was just crazy, but now, last month and August has been down. But overall, we're still up. So if we were to look at the account, we're up $30 on, $1,750 of contribution for the last 6-7 months, which is actually not that bad. When you start, your earnings are going to make up a very small portion of your portfolio value compared to the contribution you're adding to it. But over time, it's going to snowball, and you'll see that compound rate of return and compounding just go to town and really raise that value. But having saved up over $2,000 in the last couple of months, we're actually doing pretty well. So thank you for following on the monthly investing adventure, and I will see you on the next update. Later.